Hey guys, welcome to Smart Money Concepts Accelerated Learning Course, episode number 8. In this episode, we're going to be going over SMT divergence. So without further ado, let's get right into it. So what is an SMT divergence? As ICT says, it's a cracking correlation between correlated assets. SMT divergence can be used as a confluence to finding a key reversal point. So over here, we have the NASDAQ, where we created a lower low and then a higher low. And over here on the S&P, we created a higher low and then a lower low. So the S&P took sell side liquidity. Meanwhile, the NASDAQ failed to. This shows that now in price, this will be a key turning point. Let's see what that looks like in price. So here on the left side, we have the NASDAQ, and over here we have the S&P. These are correlated assets, meaning that they should always be paired with each other, creating the same higher highs and higher lows, the same lower lows and lower highs. But when they don't, that is the market tipping its hat to you, telling you that we will now start reversing at this point. We will seek out a spot of liquidity. So here, as you can see, at 1430, the NASDAQ created a higher low. And over here at 1430, the S&P 500 created a higher high. Here we have SMT because we took out liquidity with this swing, but over here we failed to take out this level of liquidity. So now hinting at us that we're due for a move down. So this is bearish SMT. We have SMT at the highs, and it would be bullish SMT if we have SMT at the lows, which I'm going to show you guys right now. In this example, once again, we have the NASDAQ and the S&P, which are correlated assets. And down here, we have a cracking correlation between correlated assets. So down here is where the NASDAQ failed to take out this level of sell side, but the S&P successfully took out the level of sell side, which is now giving us higher confluence that we will be long here. We have taken out this level of sell side on the S&P. So you can use this as confluence for your trades. I do every single day to pick out. And if you get SMT at lows and you're looking for longs, then that is a better confirmation. SMT is kind of smart money telling you that it's about to participate into the market. It is telling you that we either sold heavy, manipulated here, push higher, but we did not need to because we already manipulated here, right? So it's a cracking correlation between correlated assets. Remember that. This also works on different pairs, such as Euro USD and any other Forex pair. It usually has a correlated asset with it that when it is not correlated and it creates that cracking correlation, that is our SMT divergence that we look for either a long position or a short position. That SMT does not need to be very prominent lows or very prominent highs, but it can be very simple levels of buy side or sell side, such as this. In order to spot this live time while the market's still printing, you must have a keen eye and you must be paying attention. So here, they're perfectly correlated till we get down to here, where it may appear that they have taken the same low, but they actually have not. NASDAQ took this low. Meanwhile, the S&P did not, hinting at us that now we're going to push up. Use this in combination with a CISD, and you guys will be absolute lethal machines in these markets. So remember, it doesn't need to be prominent high or prominent low. It can be very small levels, sell side or buy side. All right, guys, that's it for episode number 8. Today we learned about SMT divergence, a cracking correlation between correlated assets, which will give us indication that price is going to reverse and move in the opposite direction that we're currently trending in. If you guys enjoyed, leave a like. Comments are always open, and I'll see you guys in the next episode.